Yo, what's going on, guys? Bexio back, and today we got a brand new video talking about investing with all the stimulus talks coming up, and stimulus has already been paid out. I think it's important to think of where you can put that money to put it to work. So if you don't need that money immediately to pay for something, then instead of going out and spending it on, clothes or new clothes or buying like fast food stuff and anything like that, you should at least consider investing it and making that money go to work and actually bring in more money. So it is very easy to take that $600 and just spend it on whatever you want because you could see it as free money and money that you shouldn't have anyways. So the thing that you should be thinking about is it is free money, but how can you take that money that you shouldn't have in theory and make it go to work so that it can make more money, and then by that time you will be able to have that money to buy whatever you want at a later time instead of having that money and buying stuff now and then it's gone. That $600 is only $600 if you spend it, and it can be turned into a lot more if you invest it. So a lot of people think the stock market or investing in general is only for rich people, and that's the only people who can either have enough money to get involved or can get involved, and that has completely changed in the last few years. Even that whole thing with Robinhood and all these brokerages finally doing free trading. You don't have to pay to buy and sell a stock, so you don't have to make a certain amount to be able to at least break even. As soon as you start making money in that stock, you make money. You don't have to pay for any fees or anything like that. So investing is for everybody, and thinking that it's only for rich people is just so wrong and needs to be thrown out. Matter of fact, being rich people investing in the market, not the truth, but the market can make you rich. That is something that it can very easily do. The most important part is to be consistent when you're investing. Decide to invest. You could take this base 600 and put it into a brokerage account and then pick an amount of money every week, 2 weeks, every month, something that you can afford to put in there that you're not going to be scared to put in there and need right away as money that you need for like rent or something, but money that it would be extra, and put it into a market and just do that consistently, because consistency is the key to creating some gains in the stock market, in any market. Consistency is key. So the first thing you can do is invest in the stock market, obviously. So the first thing is the stock market, and then within that you could go into ETFs and index funds, and that'll be the easiest way to start investing. Basically the thing where you don't even need to worry about managing it. There needs to be no time put aside to researching stocks and companies. You can put it all just into ETFs and you don't even have to think about it. Some of the ETFs that are great are like VTI and VOO. These are different Vanguard indexes that track, VTI is the broad market, and then VOO is the S&P 500. So an ETF that I'm invested in is VTI, and that is the Vanguard Total Stock Market Index Fund. And basically it's like a fund of 3,000 companies. So when you buy into that, right now the share price is like $199. When you buy into that, you're basically buying into a small portion of the companies that it holds. So it's somewhere around 3,000. You own a small amount of all of those companies. That's where it diversifies for you in that fund itself. You don't have to go picking stocks yourself. So with VTI, I've made a return of about 22%, just over 22% in VTI for the year. So if you put $600 into VTI, then it would have turned into $720 at the end of the year, which doesn't sound like a lot, but that's why I say consistency is key. Continuing to put money into the stock market, into whichever market you're in, and just continuing to put consistent amounts of money in is where you see the most amount of gains. So it could be 22% gains on 600, or maybe you continue buying in all year and it could be 20% gains on a few thousand that you made in there. So it would just compound on itself and make more money. The second way to be investing in the stock market is just by picking stocks. So instead of doing ETFs or index funds, you do picking stocks, which returns a lot more money, has better returns, obviously, but it has more risk, as well as it needs more time up front to actually have you dedicate to picking stocks. You have to go through companies, you have to look at their earnings reports, their debt ratios, how the company looks, what the future of the company looks like. You got to run it all down, do your own due diligence, do your own research, do your work for it. Otherwise, it's just kind of gambling, and you want to make smart investments and not just gamble in the stock market. So again, we can take a look at my own portfolio, and I've made 80.6%, so almost 81% gains in the year. But that includes the VTI, so subtracting that is just going to be so weird because you can't just subtract the 22% and get a new percent. So we're just going to include it. But 80% gains in the year is insane and is absolutely great. But that takes more time to do. My portfolio in particular isn't super hard to do because I'm invested in the mega caps. I took advantage of the drop during March and that stuff when everything really crashed. I took money and pumped it into my Robinhood account, into the stock market, was buying Apple stock when it was at all-time lows. Not all-time lows, but when it was at like super low valuations, Microsoft stock, Disney stock, everything. I started getting involved into it when it was really, really hammered down, when everyone else was scared to invest, because that's just how I saw it. I was watching, all these different people on YouTube, make my own decision, looking into the companies. Nothing fundamentally added up as to why they were this low, so it just made sense to invest in them. But like I said, my own portfolio is a mix of mega caps, which is like Apple, Microsoft, and then I have the big caps, large caps still, like Disney and McDonald's, and then I have the stock that was a penny stock when I picked it, and that one took the most research into to make sure that it was good, to make sure that it's something that I saw the future for, and that's the stock that is made up over almost 1,700% it's made me, and it's just crazy. And the future is still insanely bright with this stock. I don't think it's going to stop anytime soon. I still see huge gains for it, so I'm probably I haven't been taking positions into it because I didn't want to move up my average cost into it, but I might start taking more positions into it because it is. I just see the future of this stock and the future of how things are going to work in an energy sector, and I think that they're going to be insane. So you can just take a look at mine, and obviously I don't have insane risk and I don't have insane time management. It did take time to realize what you were doing and all this types of stuff, but it didn't take a ton of time to research all these companies because they're all pretty reputable, the ones that I bought into and the reasons why. But it didn't take a lot of time to do it, but it took more time than just putting money into an ETF. So you have to dedicate a few hours a week at least. I do more than that, but at least that when you're picking stocks, and if you're not going to get too risky and just keep up with like mega caps or large caps, then you can still get great returns, like 80% a year. But even at 80% a year, I don't think it's going to stay this way. I'm interested to see how 2021 plays out. I think it'll still go up. I think there'll still be an uptrend. And I don't think we're going to see a big correction or a big crash. A lot of people are calling for that. I don't know if I see it, but we could. And if that happens, I'm going to be buying a bunch more on the way down to ride up the way up. So, but I'm interested to see where the future goes, what next year holds, and how everything will react again. So the third thing you can invest into, and is a thing that's a lot of people are talking about now on a lot of minds, and that is Bitcoin, because it is just going absolutely crazy. And I've made my fair share of Bitcoin videos on this channel, and I'm going to continue to do that. So I might be a little biased when it comes to this Bitcoin stuff, but I just think the future of Bitcoin is so crazy. This is like a once-in-a-lifetime opportunity, just like the internet was an internet stock. So there was a dot-com bubble. Obviously, you see that. You saw the dot-com bubble, but you see where Amazon, Apple, Microsoft, where those companies are now, Google, you see where all of them are now. They're just taking over the world. So Bitcoin might be its own like internet bubble and stuff, but when you look at it, there's thousands of cryptocurrencies, and there were thousands of internet companies back then, and the best came out and are striving now, and I think it's going to be the same case with Bitcoin. The best are going to come out, Bitcoin and Ethereum, and I don't see much of a use case for any other coins in the crypto space. Bitcoin and Ethereum, I think, are going to be the big players, and the ones that make it out relatively easily. So Bitcoin is super volatile. It moves up and down insane amounts, so you got to make sure you have money in there that you can let sit in there for years and that you don't have to worry about. So if you have to worry about checking the price every day to make sure you didn't lose too much money, then you probably have too much money in Bitcoin. But we can look at this Bitcoin tracker that's tracking what Bitcoin would be worth if you invested the different types of stimulus amounts. And right now we can see the $1,200 stimulus would be worth $6,500, just over that. with this big correction in Bitcoin that's happening right now. And the $600 stimulus will be worth $780. So there is a lot of money being made in a relatively short amount of time. So that would be the power of Bitcoin, but it is extremely volatile. So make sure you're ready to take those rides. The highs are high and the lows are low. So just make sure you're ready for that. But as you can see, the $1,200 stimulus made a bunch of money, made 446%. That's over 5x your money. And then the $600 one has made 30% so far. So it is something to look at when you're getting started and has high reward but high risk as well. So hopefully this gives you an idea of what you can do with your stimulus money, the $600 and the possible $2,000 coming or even more. Who knows what's going to happen, but this might give you an idea of where to start. You can start investing. You can use Robinhood, Webull for stock brokerages. And I'll have links in the description. You can go through there. You will get a free stock signing up with Robinhood. And when you sign up with Webull, you can get a free 2 stocks with Webull when you sign up using these links. And then Bitcoin. Obviously, just everyone's talking about it now, and the future just looks insane for Bitcoin, but I might be biased on that. So just something to think about instead of taking that stimulus and buying, new clothes or things that you might have wanted, like material things. You can set it up to make more money and then at a later date buy those things you wanted. That'd be delayed gratification, and then you can at least have money working for you instead of just taking it and you have to go and work for your money because you've wasted the stimulus that they gave you. And as always, guys, don't forget to smash the like button and subscribe button. We are on the path to 1,000 subscribers. I'll see you guys in my next video.